Hello and welcome to Todd Miller TV, your resource for what's current in the Las Vegas real estate market. Now, what's current is really bad news. It seems like, anywhere you go, anywhere you listen, what you hear is bad, bad, bad. The market's been bad, home prices have come down, and then the future's going to be even worse. So, let's sort of revisit what happened, because what they're saying doesn't make sense with what we've seen. So, home prices have tanked to more than half of what they were previously worth, and we all know that a lot of people are upside down now, and that could mean that there's more houses coming on the market eventually. But the numbers have come out saying there's going to be 10%, 20% price drops within the next 6 months to a year. Well, what they're gauging that on is based on the number of inventory and how they expect that to climb. So they have this measure they use where if they see inventory increasing, which it is, we have more houses on the market today than we had last month, and we had more last month than we had the month before. And that generally means that the home prices are going to tend to go down because you have more houses, more stuff's available, they get less offers, they do price reductions, people end up paying less for houses. And you would think that makes sense. But there's something very simple that is missed in that analysis, and that's something called ceteris paribus, which is an economics term for all other things being equal. Now, if all other things were equal, that would be a case. So what are the unequal things? Well, the number one equal thing is this thing called a short sale. And what a short sale is you're selling the house for less than it's worth, and that thing's listed for $20,000 under market value, and it's got an offer on it, but may never close, bank may never accept it, it may foreclose before that happens, and there's a lot of these houses on the market that are short sales that are just out there. Nobody's writing offers on them, or they're under contract for some ridiculous price, and that's skewing the market. So what we're seeing is that we have two markets. We have the what's for sale. These are equity properties. They're either bank owned or someone owns them and they have equity. Those tend to be, if they're priced right, get a bunch of offers right away. A bunch of offers. Now, if you're getting a bunch of offers on properties, does that sound like prices are going to go down or going to go up? That's for you to decide. What it means for me typically is if we list for $100,000, we get 4 or 5 offers, we're probably going to sell it for more than that. The other market is short sales and all those listings out there that are coming on the market, because agents now are trying to take short sale listings to get business, and now, a lot of those aren't going to close, so we have this sort of, market of houses that are there. They're counting them statistically, but they're not really real. The owner can't, sell them for what they're worth because they can't come up with the difference, and they have to get approval from a bank, and we know that they're not all going to close. So I just wanted to sort of, let you know that don't always listen to what you hear on the news, because it's not always correct. There are other factors involved, and if you find something that's a great deal, then buy it. If it's worth half or a third of what it was worth before, could it go down? Yeah. Could it go up? Yeah. Are overall prices going to be down 20% in 6 months? I don't know. Are they going to be up? I don't know. But don't listen to the naysayers. Listen to yourself. Listen to your agent. Use statistical market analysis and values and trends and things like that. Put it all together to make your decision. That is my update for today, and I hope that you tune into the next episode of Todd Miller TV. Thanks a lot.